Thank you so much, Mr. Chairman. And I want to take a little credit for Mr. Grooms, too, because you represent my state and you are part of that vibrant community bank network that we have. We're grateful to have you, and I'm not going to let Tester take all the credit.
Thank you. We're pleased to be in North Dakota as well.
Yeah, you like it better than Montana, don't you?
That'll be our secret.
Yeah, don't tell anyone, especially John.
Yeah.
And also, if the last name is Heitkamp, we're related, and we've tried to trace it back, but you know, it's great to see you here, and it's great to see all of you. A lot of ground has been covered that I wanted to also cover, especially as it relates to mortgage lending. But I will start out by saying I think there's a great will on this committee to actually do what you need us to do. Unfortunately, in Washington, D.C., trying seems to get some attention, but doing, we never seem to get it over the finish line. And I know the chairman and the ranking member, especially the chairman, we've been involved in a number of groups since I've been on this committee that really, we get it. We understand what you're saying, we understand the additional burdens, the additional costs, and we understand how difficult that is to maneuver. And one of the things that I will say that we see trends on is that the application of artificial intelligence in compliance. And I wonder, well, how's Lincoln State Bank in Hankinson going to be able to afford? So they're going to have to do all the compliance by hiring people, but the big banks, the big institutions will see their compliance go down by application of artificial intelligence. And that's something that we haven't even had a conversation about. And so kind of looking forward beyond the challenges of Dodd-Frank, I'd like to just have a discussion on what you think threatens banks your size. You know, take us out of the regulatory world, and what can we anticipate 10, 15 years into the future so that we can keep you in business? And we'll start with Ms. Savarese?
Savarese, but you know, Heitkamp.
Yeah, Heitkamp, Savarese.
And you know, I was just with your constituents on Monday.
Yes,
So, and
thank
they
you.
all say thank you for your support. You know, it's such a forward-looking question, and thank you. And also to your point about the bipartisan approach that this committee is taking, it's so exciting to see. You know, fintech, you talked about AI, artificial intelligence, is a huge issue. And what has been wonderful is the regulatory agencies are trying to support community banks understanding how to partner with fintech so that they can be competitive. It could be a leveler, a field leveler
Really
for them.
interesting.
So we're working at ABA. We actually published a playbook for community banks on how to navigate through fintech. I think that's a big thing.
Okay, Mr. Grooms?
Thank you, Senator Heitkamp. Thank you for your support of credit unions as well. Fintech and non-regulated entities, payday lenders, a big issue. And we want to make sure we take care of those that need taken care of, but not let the entities that aren't regulated get away with things that we can't.
That's a dirty little secret about payday and predatory lending. The more we squeeze legitimate community-based organizations, the more the nefarious, truly predatory folks crop up.
Exactly. Thank you.
Mr. Heike?
I kind of agree with fintech's going to be where we're going to go look into the future. How we're going to deal with technology, how we're going to deal with those. Would you say the word that you use for pseudo AI type artificial intelligence? Yeah, is what you're looking for down the future. Is what we're going to have to really pay attention to, and how we're going to comply with that.
Okay, thank you.
I would say if there's what you might see in the future, 10 years from now, if things don't change, is that the small credit unions and banks that you're looking at might be $100 billion or $500 billion instead of what you're looking at today. But a couple of things quickly that could help in the credit union space. There's a 15-year consumer loan limit. We can't make loans longer than 15 years by statute. That could quickly and easily be corrected. There's also a 1 to 4 family home regulation whereby if you're a bank and you do a home for 1 to 4 family as an investor, it's a mortgage, which it should be. In the credit union world, it is considered a commercial loan or a business loan. So that's a little bit of a roadblock for us, a major roadblock for us in serving small individual investors who want to buy these homes because it counts against their business cap. Those two relief items could help us immensely in improving economic growth in our community.
Mr. Bissell?
Yeah, thank you for the question. I think you had asked what is the biggest threat or the biggest opportunity for us going forward. I actually want to go back to one other issue that came up earlier, and that's the opioid crisis. When I think about economic development, growing the economy, I think about putting people back to work. One of our largest and best-run family-owned companies in my region is a concrete construction firm, won a contract, needed to hire hundreds of people. 60+% of the people that applied failed the drug test. Another chunk of them refused to take the drug test upon learning that it was necessary. So those are good paying union jobs with full benefits that they eventually were able to fill, but you can imagine what a struggle that was. And it's because the opioid epidemic is all across the Northeast. So that is an issue that actually ties directly into economic development for us.
Thank you.
Fintechs offer a lot of possible opportunities, especially on the compliance side. But remember, fintechs also include consumer-facing fintechs. And those pose some real risks because they may not have the same regulatory burdens as community financial institutions. They're competition. So a company like Quicken Loans that's not a bank, if they get a federal fintech charter, they're going to be able to operate nationally presumably without regard to any state usury laws and the like, but they're not going to have the same regulatory burdens as other banks, and that seems to me to be a problem.
Yeah, and I only do this because, honestly, we spend a lot of time, we've been swirling around all the issues on qualified mortgages and appraisals and all the things we know that challenge local folks. I think way too often in Washington, D.C., we deal with the problem that's immediate in front of us, only to look up and see a crisis looming. And if the chairman will just indulge me one question, since there's no one else here.
One very brief question. And
One very brief
answer.
question. XM Bank, I know that your bank, Mr. Bissell, does a lot of work, and obviously with GE being a major employer and no longer a major employer, can you just give me some idea on how significant you think XM Bank is to the work that banks your size do?
Yeah, in our region, there are quite a few spin-offs, smaller subsidiaries that came off of GE's presence formerly in our community, and there are a lot of specialty manufacturers that do import and export work. And so it is troubling to see the Export-Import Bank really not functioning. I was reading that some of those GE jobs, they're no longer in my community, but they're actually moving to Europe now because there are export-import type agencies that are fully functioning in competing countries.
We need you guys to tell that story more.
Thank you.
Thank you.